Hello, I'm Mike Preston at New Harbor Financial. I'm going to be honest, most influencers that you see on YouTube, they don't really care about you.
I don't play single stocks. I don't screw around with gold. I don't mess with Bitcoin.
Dude, saving money is stupid.
I made money in crypto. I said to myself, I'm going to buy the...
Wow, this sounds like a money printer. If you just follow the right people there.
You're going to want to watch this video till the end because I'm about to share a powerful money mantra that...
The reason I'm doing this is so I can write off my clothes.
They care about likes, subscriptions, and things like that. And I'm not going to say that we don't want that too. We do. But first and foremost, what I do every single day is talking to individuals. I'm a financial advisor. I know that you must be thinking, well, Mike, what are you doing right now? You're right. I participate in this community, but the difference between me and most other influencers is that I've been doing this for 27 years. I'm a financial advisor first, and I've been doing it that whole time. According to the most recent Dalbar study analyzing 2024 data, the average investor underperformed the market by roughly 8% in that year, mostly because of their behavior. The human brain is wired to work against you. It's not the investments themselves, it's how you react to the market. It's psychology that makes the difference. That's the big key. And if you don't understand psychology and how it can hurt you, it can damage your returns. At the same time, recent FINRA research shows that nearly a quarter of investors get their financial information from social media, platforms like YouTube, just like this video. And that number is getting even higher amongst younger investors. On top of that, about 80% of Finfluencers are not licensed to give investment recommendations. I am, and we are here, the investment advisors at New Harbor Financial are licensed to do that. So that combination, limited knowledge and unverified advice, can lead to costly mistakes, especially when real money and your long-term financial stability are at stake. If a Finfluencer recommends something and something goes wrong, they don't have to answer to you. Me, if you're my client, it's my responsibility to protect you and your family's wealth, and I take that very seriously. The buck stops here with me. The buck stops here at New Harbor Financial. We are accountable to our advice. So I'm not telling you to completely abandon your favorite creators. I'm not telling you that Finfluencers are bad. There's very, very good educators out there. I'm just saying that since information is everywhere and it's free, it's almost like an overload of information. Just make sure that the place that you're getting your information from is based in experience, in depth, in time. And make sure that they've got the credentials and the experience to be giving that information. So you can hear multiple perspectives all the time. You can watch this stuff 24/7. And really what you need is a well-rounded opinion that comes from experience. More people are thinking about their finances earlier in life as well. That's a good thing. Young people are tuning in. Just ask yourself, are they trying to sell me something? What are their credentials? Where are they getting their information from? Because at the end of the day, the goal is to filter signal reality from the noise. And if you can do that, you're going to be way ahead of the game. So let's get into some risk of listening to just about anybody at all. So be careful about doing that. Just going online and taking for whatever you read at face value. We know from the data above that the 2024 Dalbar study said that investors underperformed the market by about 8% due to behavioral reasons. These Dalbar studies have been going on all the way back to the 90s when I started in this business. And the data has been consistent. On average, investors hurt themselves because of their psychological weaknesses. And that's not a criticism. That's how the brain is wired. Fight or flight. Flee when you feel danger. That type of thing. And so it's the even keelness. It's taking the psychological component out to some extent that I think that a good financial advisor can help a lot of people. So as I said before, there's about 80% of people that are not licensed to give investment recommendations. So there's just a lot of noise out there. And so we're not talking about things that don't matter. This is your money, your life work. And as far as money goes, it does dictate your choices in the future. It's your life savings, your nest egg, your retirement. So what's the risks of relying on just anybody out there? Well, unlike licensed professionals, Finfluencers aren't held to regulatory standards or fiduciary obligations. They're not a fiduciary, in other words, many times. Some of them are, but many of them are not. That means they're not necessarily required to act in your best interest or to be accountable in the same way that we are here at New Harbor. On the other hand, we are regulated and we are held accountable. We've been helping clients since 2005. So we're on our 21st year here at New Harbor. Before recording this video, I was in a review meeting with a client. And after this, I'll be in a 5-person investment committee meeting to make sure our portfolios are positioned to handle today's markets. I'll be in there making decisions along with the team. I have 2 simple asks with every video that we do. First, if you find value here, please like, comment down below, put your comments in. We do read every one of them, and subscribe to our channel. And second, if anything we talk about here resonates with you, please book a free consultation with us. We talk to people all day long. There's no obligation. We're looking to help people and we'll give advice whenever we can, and we can often do it very quickly. That said, I'm not trying to convince you to become a client. At the end of the day, this is a 2-way relationship, and after being in this industry for this long, I know it only works if there's alignment and you agree with the data and our approach. If you agree with what we're doing, if you agree with who we are, if you agree with the realness that we project, if that feels right for you, then maybe there's a fit. If not, we're not going to push it. Compare that to most other Finfluencers out there. Just think about that. In many cases, they're going to try to sell you something. Paid ads, sponsorships, courses, affiliate links, products, subscriptions. That's not to say that business is bad. That's not to say that making money is bad. Just make sure that you know how people are being compensated. New Harbor does charge a fee for money management for those clients that decide to ask us to do that. We're a business. We need revenue. Every business needs revenue. It's not inherently bad to want revenue. Just know what the motivations are and what you're getting into. That's all I'm saying. My goal, our goal is different. We're not here to sell you something through this channel. In this world where truly independent financial advisors, fiduciaries are becoming less common, my goal is to maintain a voice that focuses on honesty, integrity, candor, and data. I'm not always here to tell you what you want to hear. I'll always aim to be direct and honest with you. That's all I can promise. I really am going to just tell you like I see it and try to be as real and true as I can. And that's what we aim to do here every day at New Harbor. So we're different. I think we're different. We have a boots on the ground perspective. We have lots of experience. We understand the psychology behind investing. The psychology really, as we talked about early in this video, is huge. Psychology is 80% of what we do on a daily basis, and it's probably more than 80% of what dictates your future success. If you don't get the psychology right, if you don't understand your own psychology, you're going to keep making mistakes and you're going to underperform. That's why people just give up, throw up their hands, and put their money in the S&P 500. That's not bad either over a long period of time, over many decades, but we happen to be right now at a climactic, highly risky time in the market that's unlike any others, in my opinion, over the last 60 to 80 years. It's that different. So don't get the psychology wrong. It will hurt you. I'm not looking forward to just being a figurehead or a mascot for a brand that gives the appearance of making investment decisions. I'm one of the ones that's actually involved in making those decisions. We're a small team here. We've got, at the moment, 9 of us on the team. 5 of us are in the investment committee. I'm one of them. I'm doing the work every day. And I'm here to try to tell you what that experience is like, to give you a view or an eye into what the day of a financial advisor looks like, a financial advisor at New Harbor. So this is not theoretical for us. It's not content for the sake of content. It's real work, it's hard work, psychological work, and we're doing it every day with real client portfolios and, more importantly, with real clients, real people. So all of this is really important. It's even more important, I think, than other times in history because of where we are. We're in an extremely overvalued state in the market. The Shiller PE ratio is in the mid to high 30s. Profit margins are higher than they've ever been, maybe 11, 12% on average in the S&P. This is because of money printing, government deficit spending. It's not permanent in our view. And so you can take a look back throughout history and you can take a look at where we are in terms of valuations and just pick your number. Make it stock market cap to GDP, or Shiller PE, which I just told you is highly elevated. They all say we're about 3 times overvalued relative to the norms. And we kind of left the reservation back in the 90s. Greenspan opened the money spigot really post 1987, but more so in 1990s, encouraging people to start taking home equity loans, turning their homes into ATMs, and every single spot of bother along the way, the tech crash, the housing bubble, COVID, every single spot of bother was rescued. and we sit here objectively at valuations that are 3 times historical norms. And the only question that matters is, are we ever going back to historical norms? Because if we do, we're going to lose 2/3 on the stock market. And then the $39 trillion in debt becomes a problem. And so all of this really feeds into and speaks to where we are in the fourth turning cycle. This cycle called the fourth turning. A while ago, I did a video on that. But the fourth turning cycle essentially states that this is a different time than others. The stakes are higher. If we don't have permanently overvalued markets going forward, the pain is going to be pretty bad. I personally think that it's inevitable. It has to be that way. The fourth turning dictates that, in my view. But I want to make sure that you're safe. That doesn't mean sell everything, but it does mean, I think, reduce your risk here to a lower level. Realize where we are in the story. Realize that we're 3 times normal valuations and that we could easily lose 2/3 and not be undervalued. Think about real assets like gold and silver, and even physical assets like property, although you've got to be careful there because they're relatively overvalued too. Cash is not a bad thing to have. High quality treasury bills or bonds is not a bad thing to have right now. While we're waiting, our viewpoint is those things will be okay, at least for the next few years. And we think that we're going to have a market that peaks at some point. We very likely might have a euphoric blow off top coming, but after that, be careful. And I'm not even guaranteeing that will happen. We might just fall right from here. So everything about the markets today is difficult to read, and a lot of it's fake. That's what I'm saying. It's hard to tell what's real and what is not real because of constant money printing and constant focus on the wealth effect. The wealth effect is essentially a psychological game that's really meant to keep you in the game. I'm not saying get out. I'm not saying take your ball and go home. I'm saying just realize where we are. Let's talk a little bit more about New Harbor's philosophy. We completely reject hype, shortcuts, hot stocks, hot tips, get rich quick schemes. They just don't exist. What we are all about here is active investing, particularly in this environment. Awareness of risk. That's why I talked earlier about having a lower than average equity allocation. If you're completely passive here, I think you should be down at 30 to 40% max. Be down at a level that you could sit through even if you lost half of the value of your equities. Discipline, lack of emotion and psychological components. That's the hard one. Consistency, realness, directness, and honesty. That's what we're all about. I encourage you to go to your favorite creator's profile, click on their bio, check their credentials, know exactly where you're getting your advice from, and think about what the incentives could be. Again, I'll be very upfront about our incentives. We have a business and we want to manage people's money. That's the truth. But you should always know about what the incentives are. We're here to educate, and we know that some part of the population will choose us to manage their assets. Make sure that you know how the people you're watching get paid. I think we can all agree this world would be a bit better with a little more honesty, humility, and realness. That's my goal with every video that I put out. Everything we do is about directness and reality. We care about our clients. We care about people's financial well-being. It's our purpose to help people where we can. Most importantly, we understand the psychology because we understand our psychology. We've been through it. We've been doing this for 21 years, 21 plus years. And so we've been through it all. We've been through the bubbles and crashes. We understand psychology. If you appreciated this honest video, I ask you to subscribe, like the video, comment for a creator that will never waver because of the headlines and one that will always be honest with you. We would appreciate your support. And if you have any questions about your financial situation, click the link in the description below. Book a free consultation with us. We look forward to chatting with you. We're happy to give some free advice. We can cut through some of the noise, I think, for you. So thanks for tuning in. Until next time, I am Mike Preston at New Harbor. Thank you very much.